All right, guys. So welcome to the second day of the Forex Beginners Workshop. If you are watching this replay session, you're welcome. So yesterday we stopped at this particular slide, and what we should talk about today is we want to start by going through the Forex trading platforms that will lead us into taking a few trades, how to take trades on the MT5 platform. Okay, so yesterday I showed you how to download MT5 from your 10 trade dashboard. Just go to the download section. You see the link to download the PC version, the link to download the mobile app version, and every other version that is needed. Okay, so let us open the MT5. So we're going to start by looking at MT5 for PC. I'll just show you some important things that you need to know here, and then possibly we'll also take a look at MT5 for the phone. Okay, so while I'm speaking, I would also be also try to join this session on the mobile phone as well, so that it can show us everything on the PC and on the laptop. So this is how the MT5 looks like. So what is a trading platform? A trading platform like MT5. MT5 means MetaTrader 5, right? So it's a charting and analysis platform. This is how it looks like. I think I'm sharing it already. So this is how it looks like. It is a charting and analysis platform. Okay. It's a charting and analysis platform. Okay, that gives us a visual representation of movement in price. So this is where we do all our analysis. This is where you draw your charts. Okay, this is where we make trading decisions, right? This is where you try to make sense of all of these candles. This is where we get, the candlesticks, right? So this is your cockpit, so to say, where you do all of everything you need to do, right? It is very, very robust. Okay, and then this is the number one platform that we recommend. Okay, so even though there are other platforms that I would also show you today, like TradingView, but the MT5 is the number one platform. Okay, a highly recommended platform that you should learn how to use. All right, so when you get into your MT5, right, the first thing you want to do is to log in to your live account or demo account. So how do you log in if you've not already logged in? You want to come to file here, right? And then you click on open an account. When you click on open an account, you see this pop-up box here. And then what you want to do over here, you see what they are saying, add new company. So our company, which is a broker, is 10 trade. So just come here and click on 10, search for 10 trade. When you search for 10 trade, you see 10 trade come out here. So you click on 10 trade, then at the bottom, you see next, okay? And you already have a live account or a demo account. You just come over here and select connect with an existing trade account. Connect. So the last option is what you select, and then the login is your MT5 ID, which you've been provided. All right. The password, you've also been provided the password. And then once you just copy and paste everything, you click on finish. So when you click on finish, you will see your account login like this. All right. So the first thing you want to do when you are logged in to your MT5 is to populate your quotes, right? The currencies that you are going to be trading, right? So how do you know the currencies that you're going to be trading, and then how do you put them on the chart? All right, it's very, very simple. On the left hand side over here, where you have what we call the market watch, okay, you will see that I already have some existing currency pairs here. This is where I'm talking about over here. Okay, there are some already existing currency pairs that I can trade here. But when you log in to your own MT5 or PC, you might not see as many currency pairs that you can trade here. So you have to be the one to populate that platform. Okay, you want to populate this page. So how do you populate the page? It's very, very simple to add the currency pairs. So just come here and then you want to right click on anywhere. When you click on right click, okay, you see symbols. So you want to select symbols. When you do that, okay, it will bring this dialog box to you like so. And then all of the currency pairs are in this different folder. So on the Forex folder, you'd have the currency pairs. All right. The ones on gold are the ones that are showing. The ones that is gray are the ones that are not here, are the ones that are inactive. So let's say I want to add GBP JPY, which is this pair. Okay, all I have to do is to come here and then click on show symbol. So you can click on show symbol or hide symbol. Okay, whichever one you want to do. So I want to add this symbol into the market watch so that I can trade it.
Recording in progress.
Hold on. So that I can trade it. All right, so you click on show symbol and then you click on OK. So when I do that and I scroll down, I'll see JPY listed now. Okay, so the next thing I want to do is to view to open the chart of GBP JPY so that I can know what's going on and be able to trade it. So you want to add as many currency pairs as you would like to trade, or just add the only ones that you like to trade. So you can remove anyone that you don't like here by clicking on hide symbol. So to check out the charts of GBP JPY, right click on GBP JPY and then you see charts window. So click on charts window. Okay, when you do that, you can see, so this is what it's going to show. Remember, I was telling you yesterday that the color of bullish candle and bearish candle does not necessarily have to be green or red. Okay, by default over here, as you can see, the bullish candle is black. Okay, and then the bearish candle is white, but you can change everything here. So let me just quickly show you how to do that in a nutshell. Very, very easy. Okay, so now you have your chart. Okay, so let's just quickly edit this chart to reflect the colors that you like. So if you like this color that is there, you leave it as is, right? But I want to change it to something that resonates with my person, right? So I right click on anywhere on the screen, anywhere on this chart, I just right click on my computer, right? At the very bottom of that box, I'll see properties. So when I click on properties, okay, under colors, the last option under colors, this is where I'll set all my colors. So scheme, let me leave this background black, foreground white, grid. I don't like the grid. I'll just change it to black. So as I'm making all the changes, you see the effect here. Bar up, line, okay, bar down. I want to select red. Bull candle, I want it to be green, like the same line. Bear candle, red. All right, so looking at that, You can see my candle, my chart has changed. Okay, perfect. So that's all you have to do. As you can see, this took us less than a minute. So you can change the color to any color that you like. All right. So I'm just showing us the very, very important things that you need to do. Okay. But my recommendation is that once you have the time as well, you want to go through this MT5 platform and play around with it. Okay. Because obviously I cannot touch on every aspect of MT5 on this webinar. All right. I'll only touch on the very, very important things that you should note. All right. So we've talked about how to populate the market watch and how to get the currency pairs that you want to trade. We've talked about how to get the chart. All right. So when you open multiple charts, you can switch between those charts at this bottom here. Okay, it's going to show at this bottom. So right now I have a lot of charts open. I have GBP/JPY, I have Euro GBP, I have US. So let's say I want to check out what's going on Euro USD. I don't have to come to Market Watch again and start clicking on chart window because I've already opened it before. It will be here as a tab, just the way you have your Google Chrome tab. Okay, so we have a tab here. So I click on Euro USD. You can see it will bring out my tab. UJ will bring out the tab. Okay, it's as simple as that. Okay, so you can open as many currency pair charts as you like. Okay, makes sense? You can open as many as you like. All right, so once you do that, what is the next thing that you want to do? All right, so by today or tomorrow, when we start talking about market structure, every other thing would come alive for you. You know exactly where to buy and then where to sell. But right now, I just need you to understand how to set up your MT5 in order for you to start trading. And then we have some tools here that you might be needing. Okay, that you'll be needing over here. Okay, so the crosshair tool is pretty much one of the most important tools that you'll be using. Like we discussed yesterday, the crosshair is used for what? To calculate pips. So when you select the crosshair on the chart, you can use it to calculate your pips easily. And then we're able to establish that the crosshair will give you the value in points. So to convert points to pips, you simply divide by 10, all right? Good. So there are other tools here like the vertical line, horizontal line. So if you want to draw a vertical line somewhere, you select the vertical line tool and then you drag it somewhere. If you want to use the horizontal line to mark a time frame or a zone, you put it there. Okay. So if there are some tools that is here that's not on your own, all you have to do is to add it here. How do you add it? So simply right click on any of the tools. You see customize here. So you want to click on customize. When you go on customize, you can see a variety of tools that you can add or remove. So if I want to add, for example, you can see under available buttons, right? If I want to add, for example, this Gantt grid, I just select Gantt grid and then I click on insert here. When I insert it, you can see it's going to show at this very top. So you can insert, you can remove. So that's where you go to and then you add all the tools here. Okay, so when we start talking about some other tools, you don't understand these tools, but for now, you might want to only stick with crosshair tool, the vertical line, the horizontal line, and then this trend line. draw trend line, if you want to draw trends, we'll talk about trend lines shortly as well. Okay, but let me just expose you to the tool set first. If you want to draw a rectangle, select the rectangle to draw a zone. Okay, so let's start by talking about the trading terminal of the MetaTrader 5. Okay, so let's start by talking about how to place a trade. Okay, so before we actually talk about that, I want us to talk about the concept of stop loss and take profit, and then we'll also talk about market orders. All right, so before we talk about how to place a trade, let's talk about this real quick. Okay, a second. Okay, so let's talk about market orders. Market orders, stop loss, and take profits. Market orders, stop loss, and take profit. Okay, so that's what I want to talk about real quick. So let me give me a second, guys. Let me switch to something that I'll use to explain this properly for you. Give me a second. So I want to talk about market orders, stop loss, and take profits. So when you see an opportunity to trade in the forex market, remember I told you that as a forex trader, the activity that you'll be involved in to make money is buying and selling. That's why we are traders, right? The only way a trader can make money is by buying and selling. So when you see a particular opportunity in the market, okay, either a buy opportunity or a sell opportunity, there are two particular ways that you can enter into the market. So that's the concept of market orders, right? So there are two types of market orders. Okay, we have what we call the instant execution, and then we have pending orders. So we're going to explain those two right now, all right? So we have instant execution. So instant execution is a type of market order that gets you into the market in real time. You have immediate access into the market at the ask of bid price. So that trade is immediately executed. Okay, it's called instant execution, or you can also see it on some platforms as market execution. Okay, so instant execution or market execution is the same thing. And then number two type of orders that we have is called pending order. So we are going to do an example of both instant and pending order. So a pending order is a type of market order that you are the one that will choose the price at which you want to enter that particular trade. All right, so that's why it's called a pending. It's called a pending order. So unlike instant execution, that it is the current market price that you are entered into the market at, for pending order, you are the one that will set the price, the exchange rate in which you want to enter that particular trade. a buy or a sell trade. All right. Now, talking about pending orders, we have four major types of pending orders, right? So let's break this down. We have four major types of pending order. We have the buy stop, we have the buy limit, and then we have the sell stop, and then we have the sell limit. Okay, I want to explain everything first, and then we'll go into practicals, and then we'll see how these things play out. Okay, so we only have one type of instant execution, is instantly you are put into the market at current market price. For pending order, there are four different ways by which you can enter the market using pending orders. All right. So in order to explain this further, I would like to explain it how I understood it. Okay. Because it's very easy for you to get tempted to cram how to use it. But you don't want to cram how to use it. You want to know and understand how to use it, right? So let me start by breaking it down first. All right, when you think about pending orders, know that there are two, we can further categorize it into limit orders and stop orders. Okay, so limit orders are the buy limit and the sell limit. Okay, limit orders are the buy limits and sell limits, while stop orders are the buy stop and then sell stop. Stop orders are the buy stop and then the sell stop. Okay, so what are limit orders and then what are stop orders? This is what to make it easy for you to understand how to use them. So limit orders, I want you to think about reversal. So limit orders are reversal orders. Okay, are reversal orders, while stop orders are continuation orders. I'll show you exactly what I'm talking about shortly. Just stay with me, guys. Okay. Stop orders are continuation orders. All right. So for pending orders, we have two types, categories. You have limit orders and then you have the stop orders. It's under limit orders that we have the buy limit and then the sell limit, right? It's under stop orders that we have buy stop and then sell stop. When you use limit orders is when you want to enter into a reversal trade. Okay. When you use stop orders is when you want to continue, if you want to continue in a particular market direction. Okay, so let's delve into the examples individually. Let's start by dealing with limit orders. Okay, so limit orders, that's the buy limits and then the sell limit. So buy limit. Let's start from buy limit. At what occasion do you use buy limit? Okay, so let's say currently prices. Okay, so remember buy limits. You want to buy. That's why you want to use a buy limit. Okay, buy limit. So let's say price has gone up like this. Okay, so price has gone up, and then based on your analysis, you feel that there is going to be a retracement down here, that price is going to come all the way down, like so. Okay, based on your analysis. All right, so, and you use a buy limit when, if eventually price reverses into somewhere here. So let's assume that you want to take entry at this point here, where that white line is. So when price reverses into this price, I want to be enter into the market for a buy. Okay, that's why it's called a buy limit, right? So you are entering into the trade, the reversal. This was the direction. Price was coming down like so. But as soon as price got to your pending order, you are entering a reversal. Okay, that's how you use a buy limit. And then the price, whenever you are using a pending order, MT5 would always ask you the price. And over here, we can see that the price of this particular entry is 1.24165. How do you get the price? It will always be at the top right, at the far right rather, over here. Okay, so that is a buy limit. You use a buy limit when you want to enter a reversal order. And then why is it also important to learn how to use pending orders? Because there are times that you might be too busy to, enter the market for a buy or sell at a particular time. So because you don't necessarily want to lose that entry, you can set a pending order such that even though you are not online at all, once you've set your pending order, it has gone into the server, okay, of your broker, such that anytime price gets to that zone, your order will be triggered and you'll be immediately put into the trade. All right. So this is a scenario where you use a buy limit. Okay. Let's talk about sell limits, and that will also make it a bit clearer. Sell limit. Okay. For a sell limit, you want to enter into a sell trade. So let's assume that price is going down like so. And then based on your analysis, there is every possibility that price is still going to reverse into this zone, this white zone. Okay, but you realize that possibly at that point in time you might be busy, or something might happen. You don't want to miss the trade, so you can set a pending order so that if price should reverse into this zone, okay, immediately you'll be triggered into the market for a sell. So if you want to enter a sell with this market scenario, you need to use a sell limit. Okay, so because you want to trigger the sell based on this reversal here. So once price gets here, immediately you'll be kicked into the market for a sell. All right, and then the price of that sell limit is what? 1.24507. That's how sell limit works. Okay, you can see that limit orders are reversal orders. Okay, they are reversal orders because when price was reversing into this point, okay, you are entering into the trade for the reversal. Hope that makes sense. Give me some feedback in the chat box, guys. Do you understand what I've explained so far about sell limit and buy limit? If you understand, please type in yes in the chat box. If you do not understand, please type in no in the chat box. Okay, if you understand, type in yes. If you don't, type in no. Okay, Joshua understands. Who else understands or doesn't understand? Victory does not understand. Okay, so Victory, do you think possibly it's because you were not a part of the day one session as you were admitted? All right, so please, Victory, just let us to go along. I think it is because you are not in yesterday's class. So please just do a refresher on yesterday's class. Basi understands. Okay. Hold on. Okay. Okay, so let's do it again for clarity's sake. Limit orders are reversal orders. Philip said, I can't view the screen. Okay, guys, if you can see my screen clearly, please type in 1 in the chat box. I think this, like everything is good over here, Philip. You might need to scroll to the left or to the right to see the screen. So as you can see, Philip, it's all good. So check from your end, or what you can do is to log out of the Zoom webinar and then you log back in. That should help you get the screen working. Okay. So let's do it again for clarity's sake. So we have buy limits. We've already established that limit orders are reversal orders. So let's say price is going up like so. Okay. And based on your analysis, which will still teach you how to analyze the market, based on your analysis, you feel that price is still going to come back down. Okay, price will come back down. And then if price should come back down up to a particular price point, you want to be entered into the market for a buy. That is when you use a buy limit order. You are entering the reversal. So price, if price should come down like so, okay, the price is going down. As soon as the market reaches this price point, because you've already set a buy limit order, immediately you'll be triggered. Your order will be triggered, and then you'll be entered into the market for a buy. You can see that's a reversal for a buy. So this is your buy limit over here. Okay, and then this is the price point of your buy limit, 1.24209. Okay, so that's when you use a buy limit. So for a sell limit, it's just the reverse. So possibly you see price going down like so, and then based on your analysis, you feel that price is going to reverse into the zone. But you know that when price reverses here, you might not be online, or maybe you'll be busy with something, so that you don't miss the trade. You can set a pending order here, so that if price should reverse, should get into the zone, keep coming, all right? Once price touches your order, your pending order here, immediately your trade will be triggered, and then the sell is going to happen. And this will happen even though you are not online. Okay, so you can see it's a reversal order. Okay, is that a bit clear now, Mr. Victory? Let me know in the chat box if that's a bit clear. Let's go into stop orders. Perfect. Let's go into stop orders. So stop orders are continuation orders. right? So let's start with buy stop. So you use a stop order if you want to continue the direction of price. So let's say you are here, price started going up from here, something like this. Okay, price is going up like so. And then based on your analysis, you feel that this thing, or the way it's going, is still going to keep going up. There's a strong bullish momentum. So you can set your pending order to be somewhere here, such that if price should still keep going up into this zone, right? As soon as price gets here, all right, you want to be triggered into the market for a buy. Okay, so as soon as price gets here, your own trade will start for a buy over here. Okay, that's why it's called a stop order. Stop orders are continuation orders. So you want to continue the direction at which price is going. So you will set the price at which you are going to enter. Okay, that's why it's called a pending order. And then this is your price point, 1.24499. All right. That is for buy stop. Let me know if it's not clear in the chat box. If it's clear, so let me know. Then the next one is the sell stop. Okay. Next one is a sell stop. Okay. So you use a sell stop in a scenario whereby you feel that price will still keep going down. So based on your analysis, so let's say price is here. Oops. If the price is here, and then based on your analysis, you are seeing every reason that if price should keep going lower, if price should get into this price here, if the thing should get to this price here, you want to enter the market for a sell. You want to continue the direction of price for a sell. That's when you use a sell stop. Makes sense? So if price keeps going down and then it gets to where you put your pending order, as soon as price gets there, immediately your trade is going to kick in for a sell, which is a continuation of that move. That's a sell stop. So stop orders are continuation orders, right? Like so, while limit orders are reversal orders. Okay, so that is pending orders in a nutshell. It is a type of market order. And then the first one is instant execution or market execution. So ideally, most of the time, you figure out that you are going to be taking more of market execution trades. Well, depend largely on your trading system, by the way, but an average trader uses more of instant execution than pending order. So it's very, very important that you know when to use it and how to use it. And it is your trading strategy that will determine if you should use instant or pending order. Okay. So before we go into taking a look at how to place a trade, the next concept that we'll talk about is the concept of stop loss and take profit. All right. So we'll take a look at what stop loss is and take profit, because these are parameters that will be asked of you when you're about to place a trade in the market. So that's why we have to deal with this first. Okay, and they are fairly easy concepts to understand. So how do you make money in a buy scenario? Remember, we said that as a Forex trader, you can make money on both directions of the market. If price is going up, okay, you can make money in that upward momentum. If price is going down, right, you can also make money in a bearish market or in a bullish market. Okay, so in a bullish market, how do you make money? If you want to buy a particular commodity or currency pair. So let's say, let me use this example. So this is your entry price. Entry price, let's make it yellow. Entry. So you bought GBP USD at this price. So you entered the market here for a buy, hoping that the momentum will keep going up. The exchange rate will keep going up. So you are buying low, anticipating that as the price is increasing, you'll be making money, right? But there are times that you might be wrong. And instead of price to be going up, okay, it's going to be going against you. It's going to be going down. And as it is going down like this, you are losing funds, you are losing your money. So in order not to lose all of your trading capital on one trade, there's need for you to use a stop loss. So when you set a stop loss, when the market gets to that particular price, immediately that trade will be closed in a loss. So you can set your stop loss somewhere here. So let's make that red. So this is a stop loss. SL. Okay, so this is your stop loss. When price keeps going down and gets to your stop loss price, immediately the market gets here, your open trade will be closed by the system, and then you'll be closed in a loss. So a stop loss is there to minimize your losses, all right, so that you don't lose all of your accounts on that particular trade, all right? So a stop loss is an exit price, is an exit point, the price where you want to exit in a loss. That's the stop loss. So it stops your loss. On the flip side, if price keeps going your way, all right, you can set a price such that when the market gets there, you'll be taken out of that trade in a profit. So you can set your taper to be somewhere above here. So when price keeps going your direction and then keeps going up like so, and then the market gets here, as soon as this price is touched, which is your take profit zone, immediately that trade is going to be closed in a profit. All right, so stop loss and take profit are exit points in the market. So there are points where you want to take entry, and you can set it to anywhere you want based on your strategy. Okay, my recommendation is that you use a stop loss. Okay, for every trade, use a stop loss. It's very, very important. Okay, and also use take profit. Now the beauty about it is that you can also close your trades manually. So we'll go into all of that. Even if you don't use a stop loss or you don't use a take profit for your trades, you can close your trade manually at any point in time. Okay, so this scenario here, is for a buy order. Okay, is for a buy order. How will it look like for a sell order? Let's take a look at that. So for a sell, okay, you are looking at price going down. So as price is going down from a particular point, okay, you keep making money. So let's say this is your entry over here. Let's make that yellow. Okay. If you are taking a sell from a high point, as price is going your direction, you are making profits. Because when you are selling because you feel that that currency pair is going to dump, it's going to lose value. Okay, so you are selling at a premium. Okay. So, but there are times that it will not go your way. So if it's going against you, you start losing money. Your money is depleting. Okay, dollar after dollar. So that you don't lose all your trading capital on a particular trade, you want to set a zone where the market should take you out, your exit, to preserve your capital. So that's why we need a stop loss. So let's say your stop loss is somewhere here. Let's make that red. Okay. So that if price should keep going up and then gets to your stop loss, immediately that trade will be closed in a loss. And then the rest of your capital is preserved. Okay. On the flip side, when price keeps going your direction, you can set a take profit. So that when price gets your take profit, you are taking profits. The trades will be closed in a profit. That's take profits. It's as simple as that. So stop loss and take profits are exit points. Mr. Tembekwe is saying, I'm in class. Okay. So, Mr. Temitope, Mr. or Miss Temitope, we've gone a bit. We've been talking for about 30 to 40 minutes now, but I think you can still catch up because we've just been discussing theoretical aspects. So when we jump into practicals, you should be able to get the hang of it and follow through. So just pay rapt attention. And of course, don't forget to watch the replay that will be out tomorrow morning. Okay. All right. Obichuko, you're drawing on my screen. Hold on. Let me remove that. Okay, so now that we understand all of this, let's go straight into the trading terminal, which is the MT5 platform, to see how to implement all of what we talked about. Okay, so let's go to the MT5 terminal, like so. So now you are logged in, right? How do you place a trade in the market? Okay, give me a second, guys. Okay, so to open a trade on MT5 is very, very simple. So the charting platform that we are using is MetaTrader 5. Okay, I talked about it. MT5. Okay, so it's the same one that I showed you yesterday and also today. This is the MT5 platform. Okay, the one that I'm using the one, so let's just stick to MT5. Okay, so this is MT5 for now. Okay. By tomorrow or Friday, we will look at another trading platform called TradingView. Okay, but let's take it step by step. All right. Good. So how do you open a trade on MT5? Very, very simple. At the very top here, you see new order. Right. So you want to click on new order. So click on new order. When you click on new order, you're going to see this pop-up dialog here. All right. Ensure that you are trading the symbol you want to trade. This is GBP JPY. Okay. So, and the next thing that you'll be asked for is the type. This type is the type of market order. Okay, so over here, as you can see, when you click on it, you see market execution, which is instant execution, and then you see pending order. So if you want to enter the market immediately for a buy or a sell, you use market execution. If you want to use a pending order like sell limit, sell stop, buy limit, you use a pending order. So we are going to do example for both. Okay. Temitope, you're raising your hand. Do you want to ask a question? Unmute yourself and speak.
Okay, sorry, sir. What I wanted to say is that it doesn't display it like this on phone, on mobile phone. The interface is not like this on mobile phone.
Yes, I'm going to do the mobile phone as well.
So this is confusing. Kind of not. It's different the way it's displayed on mobile phone.
Yes, I heard you, and I said I'm going to do the mobile phone after this.
Okay, thank you, sir.
Yeah.
All right, sir.
Yeah. Okay, so select market execution, for instance, execution, and then over here you see volume, right? You would use, this is where you use a lot size. So volume in this is a lot size. So a micro lot, mini lot, or standard lot. We talked about that yesterday. And then tomorrow or Thursday, we are going to be talking about risk management. Under risk management, you will learn the right lot size that you should be using based on your account size and then based on your trading parameters. Okay, so let's just use the micro lot 0.01. Over here is the value of your stop loss and then the value of your take profit. You put the price point here, like so. Okay. Once you've put it, you click on sell or buy. So let's click on buy. You can see as soon as you clicked on buy, your trade is going to open. When you look at the very bottom here, okay, you see your ongoing trade. Okay, over here. So right now we are in a drawdown of 17 cents, as you can see. So when you are in a loss, it will show as red. When your trade is in profit, it's going to show as blue. And then you see all your parameters here. At any point in time, you can also manage your trades as long as the trade is still ongoing. So by managing your trades, it means that you can change your stop loss, you can change your take profits at any point in time. So how do you manage your trade? Obichuku Victory, please unmute yourself and speak.
Hello, sir.
Yes, sir. Good evening.
Can you hear me? Good evening.
Yes, we can hear you.
Sorry. There's this. I've been using demo account to practice.
Okay.
And when I enter at a particular price,
okay,
when I go back to the trade, it shows a different price price range. Like, let me say I entered at, let's say, this current price of 158.60 now.
Okay.
Then I will buy. Then when I buy, I will be seeing something like I entered the trade at 158.790. I don't know
Yes.
if it's from setting or something.
Okay. So yesterday we talked about that. What happened? We talked about the concept of spread. Okay. So if price is at 158.60, the spread will determine the price at which you are going to enter. So yesterday we talked about the ask and bid price. So over here you see ask and bid here. So
Yeah.
let's go to hold on, let me show you something. So right now, price, let's go to GPJPY. Let's see what is this. I want you to focus on the bid and ask price. Perfect. So, and also focus on the current market price. Right now, price is at 162.007. You can see it's quite different from what is here. So this is the ask and bid price for GBP JPY. If you are to enter a sell, okay, you'll be quoted into the market with the bid price as at the time in which you're entering that trade. If you are entering a buy, you'll be quoted into the market using the ask price. This is the ask price. And that will be slightly different from the current market price here. And that difference is the spread. So if the spread on GBP JPY, for example, is 1 pip, all right? So that means your entry will be 1 pip from current market price. So that's why you have varying entry prices, is because of the spread. Okay, is that clear, Victory? All right, so Mr. Philip is asking, when you are managing your trade, can you change your LS? LS doesn't mean lot size. If it's lot size, yes, you can. You cannot change the lot size because you're already in the trade. You can only possibly partial close some trades. We will get into all of that. You cannot change your lot size. You can only close some trades in partial profits or in partial losses. Is that clear, Mr. Philip? Okay. So let's go ahead. Let us go ahead. Where were we? Okay. So modifying trade. To modify your trade on your ongoing trade, just right click on it. When you right click on the ongoing trade, you see modify or delete. So click on modify or delete. Okay, so when you do that, you can see type modify position, okay, and then you can edit your stop loss, you can edit your take profit. Once you are done with that edit, for example, let me edit my take profit to 163.000. My stop loss, I want to change it to 160. Okay. Once I do that, click on modify, and then those details is now added to my trade. Okay, it's as simple as that. As you can see right now, our trade has swung into profits. It's now showing you. So right now we're in profit of 44.46 cents. You can either wait for your trade to get to your stop loss, to your take profits, or you can close your trade manually. How do you close your trade manually? Just come to this X sign and then you click on X. So when I click on X here, okay, that is close. We're all used to the X button on our browser. So when I click on X, right, it's going to close that trade for me in a profit. So that when I go to my history tab, you cannot, this is your history tab, for example. So your history tab will give you a rundown of all the trades that you've had over time, either today, yesterday, or weekly. So when I click on history, what do I see? So history, so based on what we did today, you can see the profit is there. Okay, and then you can check out all the trades that you've placed since you started the account under your history. Okay. Yes, Mr. Victory, you can terminate a trade. We just did that. So it's just you closing a trade. All right. Are we together, guys? Let me know if this is clear. As you can see, I'm not trying to rush any concept. I'm taking it step by step. If you understand everything up until this point, please type in yes. If you don't understand, please type in no. And then we'll move forward. Joshua understands. Glitchy, yes, it's clear. All right, perfect. Victory said yes. Good. So that means we are on the same page, yeah? So you understood? Perfect, Philip. Perfect. So let's do this same thing on the mobile phone right now. So I'm going to switch this to the mobile phone. Is Victory and Temitope raising their hands? Temitope, unmute yourself and speak.
The question I want to ask is that
okay,
all these candlesticks,
yes,
how can we know that they are displaying profits? I mean, how can we identify if the trading is on profit side? We are looking at all these candlesticks. I don't know that.
Okay, so remember that yesterday we talked about, were you in class yesterday, Temitope?
Yes.
All right, perfect. Remember that yesterday we discussed about candlesticks, and then we said there are two kinds of candlestick. One is the bullish candle, and then one is the bearish candle, right? So you will know if you are making profits based on the direction that you are trading. So if you are trying to, hold on, let me get a space for this. So if you are trying to sell, if you are selling, for example, so that means you want price to go down, Abby. That's why you're selling. So let's say you are selling from this point. From this point is where you are selling. So you know that you are making money if you see a red candle that is going down, like so. But if you see that a green candle is forming and is above your entry, that means you're already making loss. And then you would also see if you're making a loss or profit from the trade terminal. So let me quickly open a trade and I'll show you. All right, so we have an ongoing trade like so. You can see right now, you can see the color of that trade. It's in red. That means you're already in a loss. All right. I hope it's a bit clear.
Yes, sir.
Yes, so you know you're making a profit or loss based on the direction that you are trading. It will be very, very clear to you once you start taking trades. All right, so that's why as I'm doing this, I would also recommend that you are also opening a trade on your platform as well, so that you get familiar to the dynamics. Okay, so let me quickly go to doing this on the phone. So give me a second. Let me make a post. Or I'm gonna stop share. Wow. All right, so I'm gonna take you to, so this is an account on 10 trade. Let me go to, let me know if we can see a mobile screen. Mr. Philip, don't worry. By today, tomorrow, we'll start talking about analysis. You know the time frame at which you'll be trading from. Is that okay? So I'm trying to log in actually to an account, but it's taking a bit of time. So I think my network here. Give me a second, guys, while I resolve on the connection. Okay, so this is an MT5 account, as you see on your own MT5. How do you log in on MT5 if you're not already logged in? Once you download MT5, you want to come to somewhere around manage accounts, right? And then you want to click on this plus sign at the very top. Click on the plus sign at the top. You'll be asked for this find broker at the very top. You want to search for 10 trade. So start with 10 trade, and then you click on 10 trade, and then you'll be asked to put in your login password on the server. That's all. Your login and password was sent to you via your email or at the point that you created your account. Okay, so once you are logged in, okay, you'd have 5 options at the very bottom. You have the quotes tab, charts, trade, history, and messages. So the first thing that you want to do when you are logged into the mobile version is to populate your quotes. So this quotes is where you see all of the currency pairs that you can trade. All right. And how by default, there'll be some currency pairs that will not be here. So you must now add those pairs by yourself. Philip is saying, so it's recommended that you copy and paste, actually, Philip. Okay, that's what I do. I copy and paste. Or if you can type it manually and get the exact characters, that's fine. So how do you add currency pairs? At the very top, you click on this plus sign. When you click on plus sign, you see the folders: Forex, US stocks, EU stocks, commodities. remember yesterday I was telling you that on the 10-trade platform, we give you the option to trade currency pairs. You can trade stocks as well. You can trade crypto as well. For example, if you plan to buy US stocks, just come to US stocks folder. Okay, you can see Boeing, Bank of America, Cisco, eBay, IBM. You can see JP Morgan. You can buy MasterCard shares, Netflix shares. You can buy Procter and Gamble. You can buy PayPal. It's a lot you can buy. You can buy Ford. You can buy Alibaba. You can buy Facebook, Amazon, Apple. Okay, it's plenty. So anyone that you want to add to your terminal, your code, just select. So I want to add Apple, Google, right? But ideally, possibly you want to focus just on Forex. So let's go to the Forex folder, and then you look for the pair that you want to add, and then you add it, or you just simply use the find symbols and then search for it. So let me add GBP NTD. Okay, so I'm gonna add it. When I go back to my quotes tab, I'm going to see it at the very bottom. You can see I've added Apple, I've added Google, and I've added GBP NTD. You can see all is at the very, very bottom. Okay, so that's how you populate your quotes. And how do you now go to the chart? You can also do analysis on your phone as well. So let's say I want to go to the chart of GBP NZD or Euro USD, okay, at the very top. I just tap on the currency pair for like 1 minute, for like 1 second. When I tap on it for 1 second, I'll see some options. I'll see charts. So when I want to click on charts, when I click on charts, as you can see, it will show me exactly what is going on here. Okay, and I can also change the time frame. Over here, it is at the weekly time frame. When I tap on the screen, this circle thing is going to pop up, and then you see all the time frames that are available to you. M1 is the 1 minute time frame. That means you want to check out what's going on the market every 1 minute. So when I click on 1 minute, that means every candle here represents 1 minute. When I click on 5 minutes, every candle here is 5 minutes. When I click on 1 hour, every candle here is 1 hour. Okay, so you can do your analysis on your phone as well. Is that clear? So let's just skip to opening a trade. To open a trade, you want to go back to, okay, the easiest way that you can do it, back to your quotes, and on the currency pair that you want to trade. So we want to trade Euro USD. That's the first pair on the list. So you want to tap on it for just 1 second. When you tap on it for 1 second, you see new order. So click on new order. When you click on new order, you see this page here. The first thing you see is market execution. That is if you want to enter into the market immediately. When I click on market execution, what do I see? Okay, you see it, and then you see all of the pending orders as well. Buy limit, sell limit, buy stop, sell stop. But let's start with just instant execution, which is market execution. So at the middle, where you have 0.01, that is where you change your lot size. If you want to use a micro lot or a mini lot or a standard lot, this is where you do all that settings. So let's say I want to use 0.02 or 0.01, anyone. So SL is your stop loss, TP is your take profit. All right, so you can open a buy or sell trade without actually putting a stop loss or TP. You can always add it later on. So let's click on sell. You can see when I click on sell immediately, all right, my trade is open. You can see it. you can see that I'm in a loss of 2 or 3 cents right now. Okay. The trade at the top is a trade that I opened a long time ago. You can see that that particular trade is in profit of $17 profit. But the one that we just opened now is in 4 cents loss. Okay. And you can close a trade manually. So let's say I want to close this trade now. I tap on it for 1 second. You can see close position. When I click on close position, you see close with profit. So let me close it. Done. Okay. My profit will reflect on my balance. So it's there. When I click on history, you can see my profit for today. Okay. You can modify your trade as well. Just tap on it for 1 second. You see modify. Right. You can change the take profit. Okay. You cannot change the lot size. You can change the take profit, and then you can change the stop loss as well. Once you do that, this modify button is going to be active, and then you can modify. Is that clear? Okay. So I'm just going to go ahead and close this trade because I don't need it open. Okay. I can close the loss. It's a small loss, so that's fine. Close the loss, and then we are done. Okay, so what I want you to do, guys, is to play around this particular platform, right? On your 10 trade dashboard as well, we have in-depth training about all of those things. There's a section on your 10 trade dashboard. It's called the 10 Academy. So we have short videos that walk you through the MT5 platform. All right, but I've shown you the major things that you need. Okay, populating your quote section, checking the charts, changing time frames. All right, over here as well, you can see that I've changed the color of my candlesticks to green and red. You can also change yours to any color that you like. How do you change the color? You come to the chart section, you tap on the screen, you see this settings icon, that wheel settings icon, you select it, right? At the very bottom, you are going to see colors, customize color scheme at the very bottom. So when you click on it, you see all of the color selections that you can use. And then once you're done, click on done at top. Okay. It's a quite intuitive system. If you're already, using Facebook or using Instagram, this is a platform that you can use and understand easily. Okay. And as you also try it out on your own, as you practice on the demo accounts, these things will, make a lot of sense to you. So as we progress, we'll start talking about some advanced features of MT5 because I don't want to load us up with things that we might not be needing immediately. Okay, so right now, you just need to know how to open a trade, how to close a trade, how to set your stop loss, your take profits, how to look at the charts. Okay, that's all you need for now, and then you have it on your MT5. Okay. Mr. Obichuku, let me know if this is clear. Mr. Temitope, let me know if this is clear. Do you understand this walkthrough so far on MT5 platform? If you understand, please give me a yes in the chat box. If you don't understand, please give me a no in the chat box. All right, so you understand. All right, so your assignment number 1 for today, guys, is to go through the MT5 platform. If you are using MT5 for PC, go through the platform and just explore it. Likewise, do the same thing on your phone as well and just explore. Right. On this trade tab here, is where you see a list of all of your ongoing. Let me open another trade. Euro USD. Let's buy. Okay, so on the trade tab on your phone is where you see all of the ongoing trades. You also see what's it called, your balance. You also see your equity and things like that. All right, so right now the balance is $2,497. Okay, the equity is your balance plus or minus the current running position. So right now I'm in 1 cent profit. You can see it reflects on the equity. So if you are currently in a trade and then you are losing like so, that loss will reflect on your equity. All right, but your balance will remain the same. Margin, free margin, margin level, right? I don't want to get into that in this particular session. I'll recommend you go through the videos on the 10 Academy that talks about margin. Okay, you understand that concept a lot clearer. Okay, perfect. Okay. So let me know if we have any questions, guys. Philip is saying someone doesn't have your contact, right? The contact that you need is the contact of your account officer. Your account officer is who you would reach out to if you need any form of support. Okay, that is your dedicated account officer. All right, and I believe that you must have been reached out to by your account officer. All right, so please, if you have any questions, reach out to your account officer. All right, Obuchukwu is asking, do you regulate how you enter? I don't get a question, Obuchukwu. Okay, can you rephrase your question, Obuchukwu? So let's talk about one particular concept today, and then we'll continue tomorrow. Today, let's start a training on market structure. Okay, so I want us to end this session in the next 10 to 15 minutes. So by tomorrow, we'll continue. We still have Wednesday and Thursday together here. Okay, so let's start, guys. Let's talk about market structure. So remember, we are doing practicals this week for the rest of the week. So this is your proper introduction into practicals. Yes, we do, Mr. Victory. So that's what I was saying, that on Thursday, you would learn about risk management. Okay, that will let you know how much you trade with based on your capital and your risk level. So please ensure that you don't miss out on Thursday's session, which is the day 4 session. It's very, very important. That's what will crown everything that you've learned. Okay, so Victory. So please, just let us take it step by step. I'm still going to answer all your questions. So we are taking it step by step, and then everything will make sense together once you follow. Just follow me, okay? So let's talk about market structure. Market structure. Now, in this beginners class, market structure is quite wide, but for beginners class, I want to talk about just 2 aspects of market structure. All right, I'm going to talk about 2 aspects of market structure. I'm going to talk about support and resistance. And then I'm going to talk about trends. Okay. So these are the two aspects of market structure that we are going to deal with in this beginner's workshop. And today we are only going to look at support and resistance. So tomorrow we will look at the concept of trends properly. And then tomorrow as well, we are now going to merge support and resistance and trends in order for you to get a great perspective of the market that will let you know the best places to buy and the best places to sell in the market. And then we'll look at how everything is playing out in your Korokoro eye in the furniture market. So that'll give you some bit of confidence in what you learn in this 4-day bootcamp. All right. So my goal after these 4 days that the following week you're able to understand what's going on in the market and make some very good decisions when you are practicing. Okay. So let's start by talking about support and resistance. It's a very, very beautiful topic and quite easy to understand. Just open your minds and hearts to this. So when we say support and resistance, there are a few things that I want you to think about to make you understand it, right? I don't want you to cram anything. I want you to understand. Okay. And when I was learning this concept, this was how I was able to understand it. Okay. When you think about support and resistance, I want you to think about reversal zones in the market. Okay. I want you to think about reversal zones, or you can say areas of reversal. Okay, or reversal areas, anyone that's like sure. Okay, reversal zones in the market. Okay, support and resistance are zones in the market where price changed direction, where we see reversal. Okay, and why are we actually studying learning support and resistance? I'm going to answer that question in a nutshell. But to buttress these points, let's talk about each of these concepts detail. So let's start by talking about support. Support. All right. So what is support? A support is an area of the market that acts as a floor. Okay, easy way to understand it. A support is an area of the market that acts as a floor. What am I talking about as a floor? Okay, so this is support. Okay, floor. So a support zone would act like this. So you see price coming from up like this, and then it's going down. And then suddenly, price gets to a particular place, and then you just see a sharp or a swift change in direction, like so. Something was responsible for pushing this price back up. Let me change this color too. Something was responsible for pushing this price back up. What was responsible is what is a support, because it is acting as a floor. Just like the floor in your apartment now. If you throw your phone on the ground now, most likely it's not going to go beyond that ground, except your floor is not very, very strong, or except what you are throwing on the floor is also very, very strong. Okay, so there are different things involved. But in this case, know that a support level or support zone in the Forex market is a zone that acts as a floor where we see areas of where we see reversal. And you cannot miss it. It's so visible and clear to the eye that you cannot miss it. Okay, so why exactly are we trying to know what a support is? What is the usefulness of support? Okay, because support, when you are spotting a support zone, it is not something that is happening in real time. It is something that has happened in the past. So in essence, we are using historical data to predict the future. I'll take it again. When we talk about support and resistance, the major goal is to use historical data to predict the future. So what am I talking about when I say historical data? All right. So a support, when you look at price, you figure out that a particular zone acted as a support because you saw that price reversed in a particular place. So what that means is that if in the past, this happened in the past, so possibly if price should come back down into the same zone in the future, possibly we are going to see another reversal up like so. If price should come back there again, possibly in the future again, we might see another reversal. All right. So we have used this historical data to predict possibly what is going to happen in the future. It's just like saying, I like to use this example so much because we are near our election. Elections is next week, right? It's just like saying the obedience, for example. Obedience wants to vote for Peter Obi. Why are they not voting for Mr. Atiku and Mr. Tinubu? Because these people, Tinubu and Atiku, they've led Nigeria before in a particular capacity. So they have historical data. And then most of the time, in our experience as human beings, most of us have found out that people don't really change that much, right? People don't really change that much. So if they did something in the past, most likely, there's a higher tendency for that same thing to be repeated. All right. So if they did not perform well, or if they performed well in the past, then most likely in the future, they would also perform well, vice versa. So that is what data is pretty much about in this case. So you are identifying a support that happened in the past, and then you're going to drag that support to the current market price, to the future, to predict what will happen. So in essence, what I'm saying is that when you identify a support zone like so, right? When price is coming back into the zone, because in the past, this zone acted as a support, you now want to look for opportunity to buy. In essence, your first inference from this is that we buy at support. It is in a support zone that we look for buy opportunities, right? Write this down, guys. We buy at support. Okay. A very, very important concept here. It is at a support zone that we look for buy. So we look to buy in a support zone. Okay, because the support zone is a low point in the market, is a discounted zone in the market. If in the past, right, if in the past a particular zone acted as a support, possibly in the future, that zone will still act as a support. Now, there is now a caveat emptor to it. There are some things that we look out for in order to validate a support. Okay, so in validating a support, you want to wait for 2 touches of that support zone. So over here now, okay, this is 1 touch, like so. Price came here and then reversed. Okay, this is 1 touch. Okay, so you want to wait for price to come back into this zone again and then do the same reversal. Okay, so once you see 1 touch, 2 touches, okay, it has given you a validation that, okay, possibly this is a support zone that you should take trade. So when you see that a support zone has been validated like so, the next time that price enters that zone, you now want to look for buy opportunities. All right, so 2 touches validates a support. And now let me say unequivocally, how they say it, okay? They're using a support is not a trading strategy. So you just don't buy at support. There are other confirmations that we are going to talk about in order for you to enter at support. Right? A support and resistance is not a trading strategy. What a support will do for you is just to let you know that possibly you have a good trading setup in this area, but it does not validate you taking a buy or sell order. You need to wait for further confirmations that we are going to talk about. Is that clear, guys? Now, let's talk about resistance. Resistance is a direct opposite of support. So a resistance is an area of the market that acts as a ceiling. Just like the ceiling in your apartment now. When you throw something up and then it hit the ceiling, most likely it's going to drop, come back down. So the ceiling is acting as a resistance. Likewise, in the Forex market, when you see price going up from a low point like so, and then price gets to somewhere, and then suddenly you see a sharp reversal. What is responsible for that reversal, that change in direction, is a resistance zone. All right, so back to our philosophy of using historical data to predict what will happen in the future. So if we know that in the past, this zone acted as a resistance, so that means possibly the next time price will reverse into this resistance, we might also see another reversal to the downside. But now we need to find a way to validate this resistance to know if we should be taking a trade here. So just like we buy at support, what do we do at resistance? We sell at resistance. Okay, so we buy at support and then we sell at resistance. All right, we buy at support, we sell at resistance. How do you validate the resistance zone? You want to wait for 2 touches. Okay, so you want to wait for price to come back into that zone. If price gets back into that zone, and then we see another retracement like so. Okay, so that is the validation we're looking for. So first touch here, second touch here. Okay, so that means that resistance zone has been validated. So now we can now wait for price to retrace into the zone. Once price retraces into the zone, we'll be looking for sell opportunities over here. So we're anticipating a sell move like so. as simple as that. Right? We are simply using historical data to predict what will happen in the future. So let's go to the chart. And then what we want to do, we want to identify areas of support and then areas of resistance. And then I would also give you an assignment. Your assignment is to identify support and resistance zones of your own. Is that clear, guys? So we should be out of here in the next 10 minutes. This is already 8 p.m. Okay. So over here, let's start from over here. I can see a resistance zone. Okay. I can see resistance. So let's do a bar replay here. So let's assume that this is where price is. All right, good. So we're together. So over here, we can see that price came here like so. Price was going up, and then suddenly you can see the swift reversal. Okay, so there's something responsible for that reversal. Okay, it's a resistance. So that means there's a resistance here. There's something pushing price back down. There's something that is not making this bullish candle to keep going up. Something pushed it back down. So you as the Forex trader, you want to identify that zone, because that might be a zone where you should be looking to take entry sometime in the future. Okay, so how do you draw resistance zone? How do you draw support zone? A resistance and support is not a line. It's not a line like this. No, it is a zone. Okay, so my recommendation is when you see reversal like so, for example, this reversal now, for a resistance, you want to take the last buy candle before the sell move. So price, as you can see, price came up, went up like this before going down. Okay, so in order to draw your resistance zone, how I do it is that I take the last buy candle, the last candle that represented the up move before the reversal happened. That is my resistance. So I'm going to use my rectangle tool, and then I'll take everything from here, okay, to the upper extreme, and then I draw it all the way forward. So this is a resistance zone. It's resistance. Okay, and then you can see over here exactly what is happening, right? So when price got here, let's change this color to white. Or hold on. Let's do that. So where price got here, right? You can see the retracement like so. Okay, so this is your first touch, right? The first touch, and then you can see price retracing back into the zone, and then you can see the resistance. Okay, this is the second touch. So first touch, second touch, that has validated your resistance zone. So that means the next time that price should retrace into this zone, you want to be looking for sell opportunities, right? And then as you can see, when price retraced into the zone, right, we saw the sell move like so. So we would have looked for a confirmation somewhere here to sell. Okay, but you can see the zone is still very much active. Let's see if price should retrace back into this zone. are we going to see another sell opportunity? So let's play this. Let me play this forward. You can see as price is moving into the zone, all right, is price going to drop or not? You can see how price is dropping. Okay, you can see how that resistance zone still held. It held, and then ultimately it pushed price down. So if you are sold in this resistance zone, you would have made a lot of profits during this period of time. Okay, even if you joined the move late, maybe somewhere here, you can see this resistance zone held. Okay, you can see if you join here, you can see first touch, second touch, third touch. Okay, it push price down. Fourth touch, push price all the way down. Okay, that's the beauty of resistance, and then confirming a resistance zone. Give me some feedback, guys, in the chat box. Do you understand how I explain resistance? If you do, please type in a yes in the chat box. If you don't, type in a no in the chat box. Do you understand what resistance is? And the fact that we look for sells in a resistance. Victory understands. Who else understands? Kelechi understands. Okay, please, if you don't understand, let me know. Temitope doesn't understand. Okay, that's fine. Who else doesn't understand? Okay, Mr. Joshua, I think is already a good trader. I think you should understand since you're already trading live. All right. So Mr. Temitope, watch out for my explanation for support. And then if you don't understand again, then I'll take it again. So let me use this example for you. So price is somewhere here. No, let's use reverse it. So over here, you can see price doing this, price going down, and suddenly we see a reversal like so. Okay, so that means there's something responsible for pushing price back up like so. So you want to draw out the support zone because support out as a floor. In this case, the support. How do you draw out your zone in a support zone? The last candle before the reversal is what you are concerned with. So this is the last candle, this bearish candle here, from beginning, from top to bottom, drag it out. Okay, so let's see. Now I want to wait for the validation. So let's validate this. So if price should retrace back into this, to validate this support zone, we must see at least 2 touches. So let's play it forward. Price came back into the zone like so. You can see, so let's do this. Yeah, see, price came up. So these are first touch. Price went up, reversed, second touch over here. Okay, and then went up. Then we are the retracement now for the third touch. So we've already confirmed that this is support zone with these 2 touches here. Okay, so when price gets back here, we are now looking for opportunity to sell, rather to buy, because we buy at support. So let's play it forward if we are going to see an upward momentum. So when you play it forward, you can see how this support zone, see how it pushed price up because we validated the support zone. So if you had bought somewhere here, you would have made so much profit. Okay, and price is still reversing into the support. So that means we can still look for buy opportunities. So let's see if the support zone is still going to hold, right? All right, you can see the support zone still held, still push price back up. Price came back again into that support. The support zone still held, it pushed price back up. You can see. Let's see if it held or it was eventually broken. Good. Eventually, the support zone was broken, but check out how well it held here. All right, so a support zone can be broken. A resistance zone can be broken. All right, which is why you just don't enter a buy at support, you just don't enter a sell at resistance. When price is in a support zone, you want to wait for some certain confirmations. When price is in a resistance zone, you want to wait for some certain confirmations before you pull the trigger. All right, Mr. Temtokwe, let me know if that is clear so far. Give me some feedback, a yes or a no if it's clear. Okay, don't be shy if you say no. If it's a yes, type in a yes. Okay, you understand now, perfect. So it's the same analogy that we use for resistance. So guys, your assignment for today, this is the end of the class today. Tomorrow we'll talk about trends and then we'll tie everything together to form a perspective. What I want us to do, guys, on your own this night, before our session tomorrow, please, I want you to identify, go to any currency pair of your choice. Go to any currency pair, any time frame, and then I want you to identify areas of support and resistance. I want you to be able to draw it out by yourself, okay? Because that's what you'll be doing in real time when you start trading. So I need you to be able to spot areas of resistance, okay? Spot areas of resistance, spot areas of support, like so, okay? And check out how price reacted at different resistance zones, at different support zones, how price broke a resistance zone, how price broke a support zone, you know? So I want you to look at the charts and then play with it, okay? Play with it. That's what I want you to do tonight, stroke tomorrow. Identify areas of resistance, areas of support, and then identify it using the rectangle tool. Use rectangle tool to identify it. Okay. Is that clear, guys? Are we together? Give me some feedback in the chat box if you are together. Okay. If you understand what I've said so far, type in yes. Or let's say Kelechi, perfect. Perfect. So please, let us converge again tomorrow night, same time, 6 p.m. Nigerian time. Tomorrow is going to be an explosive session because we are going to be tying in our understanding of support and resistance with our knowledge of trends that we'll learn tomorrow. And that will give you a solid understanding of when to buy and then when to sell. Because again, I told you yesterday, the whole essence of what you are doing as a Forex trader is to know the best price to buy and then the best price to sell. That's what you are doing in a nutshell. That's a skill set that you are learning. You want to know when and where to buy and when and where to sell. So we've started that journey right now. On the very surface level, basics, you need to understand support and resistance. If you don't understand how to mark out those zones, every other thing that will teach you will not really count. All right. So you want to have this under lock and key. It's very, very important. So please, between now and tomorrow night, we have about 24 hours, right? So if you devote 30 minutes to 1 hour tonight or tomorrow to do that, it will really help you a great deal. Okay. Do we have any questions tonight before we wrap up this session? Let me know if you have questions. While you're thinking about questions, let me also thank everybody for coming live, for showing up live. All right, it means a lot. and it means that you appreciate knowledge and information. You have value for knowledge, right? So in the absence of questions, let me wish us a very, very remarkable night. I'll see everybody tomorrow. Bye bye, guys. God bless you.